Shelby thought he was doing everything right. He had a good job, steady paycheck, health insurance, direct deposit hit every other Friday like clockwork. But he wanted more. So he started a side business installing computers and setting up home office networks for people in his city. Word spread fast. Small business owners needed him. People working from home needed him. By the end of that first year, Shelby had made $28,000 on the side. He was proud of himself. He should have been. What he did not know was that the IRS was already counting that money, and in 4 months, they were going to send him a bill he could not pay. This is what happened to Shelby, and this is what nobody warned him about. When Shelby started his side business, he did what most people do. He kept working his regular job and he took on installation work in the evenings and on weekends. His clients paid him different ways. Some paid cash, some paid through Cash App. A few of the bigger clients, the small businesses, cut him actual checks and asked for his information for their records. Shelby did not think much about that last part. Every payment went straight into his personal checking account. Same account as his paycheck. Same account he paid his rent from. Same account he bought groceries with. And here is what Shelby believed, and this is the belief that cost him everything. He thought that because his regular job already took taxes out of his paycheck, he was covered. He figured the side money was extra, bonus money, money he had already earned by working harder than everyone else. He thought he could just keep it. Shelby was not being dishonest. He was not trying to hide anything from anyone. He genuinely did not know. Nobody had ever told him that when you earn money outside of a W 2 job, you are not an employee anymore. You are a business, and businesses pay their own taxes. By December, Shelby had spent most of that $28,000. He upgraded his tools. He bought a better laptop. He took his mom out for her birthday. He paid down a credit card. He put some toward a car repair, normal life things, reasonable things. The money came in and the money went out. Then January came. Shelby got a 1099-NEC in the mail from one of the small businesses he had worked with. Then another one, then a third. He looked at those forms and he felt something drop in his stomach because for the first time he realized the IRS had copies too. He sat down to file his taxes, expecting the same refund he got every year. Maybe a little smaller. Maybe he would owe a couple $100. The number on the screen said he owed $4,187. He refreshed it. He entered everything again. Same number. Shelby did not have $4,000. He did not have 400. Here is what happened, and here is why it happens to so many people. When you work a W 2 job, your employer withholds taxes from every paycheck: federal income tax, Social Security, Medicare. They also pay half of your Social Security and Medicare taxes for you. That is part of being an employee. When you earn money as an independent contractor, which is exactly what Shelby was doing, none of that happens. Nobody withholds anything. And you are responsible for both halves of Social Security and Medicare. That is called self employment tax, and it is 15.3% right off the top. On $28,000 of net business income, that alone is over $4,000 before we even talk about regular income tax. And because Shelby's side income stacked on top of his W 2 salary, some of that money got taxed at a higher rate than his salary alone would have been. His employer withheld taxes based on his salary, not his salary plus $28,000. That gap between what was withheld and what he actually owed, that was Shelby's tax bill. But here's the part of Shelby's story that changes everything. When he finally sat down with a tax professional, the first question he was asked was not how much did you make? It was what did you spend? Shelby had a laptop he bought specifically for client work. He had software subscriptions, he had cable, connectors, tools, and testing equipment. He had driven to client sites all over the city, hundreds of trips he never tracked. He had a phone he used almost entirely for business calls and client scheduling. Every single one of those was a legitimate business deduction. He just had no records. Some of it he could reconstruct: credit card statements, order histories from online purchases, photos of receipts he happened to have taken, calendar entries showing client appointments he could match to mileage estimates. It was messy. It took hours, and he still lost deductions he could not prove. But when it was done, Shelby's $4,187 bill came down to just under 2,300, almost $1,900 recovered from deductions he already qualified for and almost missed entirely. He set up a payment plan with the IRS for the rest. Then he did the thing that actually changed his situation. He opened a separate business checking account. Every client payment goes there now. Every business expense comes out of there. His personal money and his business money never touch. He connected that account to a free bookkeeping app that categorizes his transactions automatically. He spends about 10 minutes a week reviewing it. He started tracking mileage with an app on his phone, every drive to a client site logged, and he started setting aside 30% of every payment he receives the moment it hits his account, not later, not at the end of the month, immediately. The next year, Shelby made $34,000 from his side business. He knew what he owed before he filed. He had the money set aside. He claimed every deduction he was entitled to because he had documented all of it. There was no panic, there was no surprise, there was no scrambling in April, just a number he already knew was coming. So here is what Shelby's story means for you. If you have a W 2 job and you are earning money on the side, freelancing, installing, delivering, selling, consulting, creating, you are not just picking up extra income, you are operating a business. The IRS already sees it that way. The question is whether you do. Because the mistake Shelby made was not spending the money. It was not knowing that a portion of it was never really his to spend. And that is a completely fixable problem, but only if you fix it before the year ends. I'm Paulette Foster with PRF Tax Service. I help people with W 2 jobs and side businesses avoid expensive tax mistakes before they happen. If Shelby's story sounds a little too familiar, start with my free tax savings checklist. It walks through the deductions most side business owners miss. Link is in the description. And if you want to sit down and figure out where you actually stand before this year closes, book a tax strategy session with me. Also in the description. New videos every Tuesday and Thursday. Subscribe so you do not miss the next story.